So before we started recording, one of the things you said is that you have fairly controversial opinions about fintech and the future of fintech. So what would you say is like the biggest thing that you believe, but many people around you would say, no, Brad, that's wrong?
I think there are two things, and let's go right back to the first wave of fintech.
Welcome to another episode of Inside the Vacuum, where we explore the challenges that come about when you're working in the vacuum of space and time, trying to build something cool, trying to build new technology, and more specifically today, to build fintech technology or financial services technology. And on the line today, I have Brad, COO and one of the co-founders of Cledara.
Thank you so much for having me, Marcel. And I have to say that, being invited to space and time is a great place to be right now. It's much bigger than my apartment.
I can imagine. So how long have you been in home office at this point?
So at Cledara, we took a call to go home office really early on. So I think it was like the first few days of March. We didn't want to, force people to take commuter trains and whatever with what was happening. And it's been pretty good for us. We've been pretty flexible with letting people work from home already. But, it's a new challenge when you now have to work from home.
What was the biggest change for you, though?
So I've always been on the commercial side of the business, and the way, particularly in an early stage tech company, I believe that you grow your business as you meet people and you build relationships and you talk to them and listen. And now, previously that would be quite unstructured. You could do it at events or people you run into at a cafe in Shoreditch or something like that. Now you're having to do it deliberately and schedule Zoom calls or Hangouts or something to try to create those same conversations.
So it's much lonelier without the ability to go outside and really talk to people about what is it you're building, how that will help them, and that sort of thing, right?
I think so, but I also think it's it's coming back, but it's having to be done a lot more deliberately. So since this has started, we've had way more conversations with other companies in the Techstars or the Anthemis portfolio. We're on portfolio calls with Anthemis maybe 2 or 3 times a week at this point. And it's been super, super helpful, not only learning from other founders, but just, trading notes on what to do right now and getting to know them as well, of course.
So what have you been hearing? What's the buzz around what they are learning as they're going through this with you?
I think there's been a few things. So number one, it's affecting everyone's business in some way. So for some companies, maybe we have one company in the Techstars portfolio with us that's a direct-to-consumer subscription feminine care product, and feminine care products are hard to find in stores right now. So their business is really flying. On the other end of the spectrum, you've got companies that are used to doing field sales, right? Meeting people to sell technology to buyers in person, that have never had to do inside sales before, that are thinking, well, our revenue or our growth is going to zero. We're in fact churning customers, and we have to think about how we protect the business. And so, there are two different worlds. What I will say is that everyone is playing a new game that they weren't playing 1 month ago. And that's requiring, a lot of really tough decisions in real time, whilst you're in that fog of war, pretty much. I guess remote working is the obvious one. Companies, even very established companies that require people to come to an office every day, like banks, are suddenly figuring out, well, everyone with their Windows laptops having to connect to the office network on a VPN that was kind of designed for a few people to do it, but certainly not the whole bank. Figuring out that actually, their virtual desktops into their applications that they use to run the business that were built by, the lowest bidder 20 years ago no longer make sense. And on the other side, you've got fintech that are used to operating in the cloud, that have their whole, not only their product and business in the cloud for things like sales, but also their operational processes relying on cloud-based tools, having a real advantage. I've heard of plenty of banks actually what they found out that working from home is a really wonderful idea, but it's not even the problem of the VPN. Actually, a lot of their staff had desktop machines, right? So how are they working from home right now? The problem of business continuity and things are really being challenged, and people are really finding out what that means. In a way, in the world of financial services, it's almost like banking has been, or traditional banks has been forced to come to the home territory of fintech, and it's certainly a massive opportunity for the whole industry.
Yeah, I think we're seeing this all over the world as governments are now planning various schemes to help out the population with, surviving quite literally, because they're almost going to be paid for staying at home.
I heard one really funny story about a very large European bank that, they'd taken pretty good steps to be quite fintech oriented, right? And they'd established part of their business was actually investing in fintech, either directly or through VC funds. And they didn't have a procedure for electronically signing off on new investments, right? They'd envisaged this world where everyone would be gathered in a room, there would be a piece of paper handed about, and 3 or 4 people would put their signature on it. And now, obviously, they can't be in the same room. And not only that, they're actually not in the same city, because many of the signatories have, gone to their summer house or, to stay with elderly relatives in other cities. And so you can't even get things signed right now. It's amazing, really incredible. And I think, long term, what founders need to be thinking of, or even, rather right now, right? Like, get out of risk management mode, handle that, but also think about what the long-term changes in the world are, and think about how you can position your business to take advantage of that inflection, that change in behavior, and the new opportunities that are arising. Because I think we're, even though we're all sat in our kitchens and on our sofas and bedrooms right now doing work, actually the world is kind of changing faster than ever in some areas.
Absolutely. So, you're now the COO and one of the co-founders of Cledara, but you've had a rich history in fintech. How have you seen sort of fintech change over the past at least the last decade since the last crisis, and where do you think it's going?
That's a massive question. I think.
I know.
I think so. I haven't written any code since university, but I've always come at things from a technical mindset, right? I had a tech company when I was in high school, and university, that went on to be quite big, and I kind of ended up in fintech by accident, right? I moved to London just before 2008 crash, and ended up working for a bank. And because I was the tech guy, they tasked me with investing their balance sheet in tech-led financial services. And I have to say that because in 2008, really the word fintech hadn't existed. And I think where things were back then, that was basically about having a traditional business with a website, right? So it's kind of tech-led financial services then was about really your sales channel, right? So instead of having to go to a branch to get a bank account, you could just go to a website and enter some details and do some, maybe even download an app. That would be amazing, right? Do it from your phone. And this created a lot of very interesting businesses. There was a wave of businesses that were all about buying insurance online. In the US, there was, I think it's fair to say, the first ever neobank being Simple that was started, which really, was an amazing idea at the time, and got to applaud the founder for being years ahead of most other people. But if you look at that product, it was really about taking a checking account or current account, and what had been available to you from your bank, maybe through a website or in the branch itself, was put on a different screen, right? It was put on a smaller screen with a different form factor, and you could interact with it by touching rather than talking to a person or using a mouse, but really nothing else changed. And that was interesting, created a lot of great businesses. But I kind of feel like, though, that wave of businesses, buying insurance online, getting a bank account, whether that's Monzo or Revolut or whatever, that's kind of done, right? Those players have all reached feature parity with traditional incumbents. And really, I think their business is about going after younger cohorts of users, right? Because they've got a brightly colored card, they've got some really great positioning, and they've got a process that makes it much easier to sign up. You don't have to go to a bank branch to get a bank account. But I think that place is pretty crowded right now, which is why when you look at how banks are reacting to fintech, actually, I think it's really stupid for the most part, right? There's absolutely no reason in the world that a bank should try to, launch a nice app under a different brand with a brightly colored card. That ship has sailed. You have fun conversations with young people now, right? And I call young people because I feel pretty old, but you talk to a person who's a customer of Monzo, and you say to them, well, why are you using Monzo? Why aren't you using a proper bank? And actually, what one person said to me the other day, which was perfect, it's, yeah, but why do you use Barclays? It's got a worse app. It isn't as nicely designed, and it's harder to sign up for. And hey, my Monzo, which is cool and easy to sign up for, does all the same stuff. So, we're at that point, and banks are fighting kind of yesterday's war by trying to position themselves for that. I think that the second wave that happened was really about digitizing user journeys that were pretty rubbish beyond the bank account. So this is like, as a retail investor, how do I invest in the stock market? And you had the robo advisors come out. You had more tech come into capital markets, and that's been the second wave. We're not as well developed in that. I think there's opportunities for new winners there. But what I'm really excited about is what I call the third wave of fintech, and to borrow a term from Anthemis, one of Cledara's investors, it's really about embedded finance, right? So thinking about it, if you think of just the world of business, right, the beginning or end of any business interaction is a payment, right? You buy something and therefore you want support for it. You have a sales conversation that results in a payment. And so payment and banking is really inherent in a very high percentage of interactions we have. And if you think about that, if you're in some sort of environment, either physical or digital, why, if you're having that reaction, do you need to come out of the environment you're in, the app or the video chat or whatever, to go into a different place, your banking app, to finish that user journey? Why couldn't they all be in one place? And it's even harder in B2B because actually it's not everyone in the business that has access to a way to pay, right? Usually you have procurement teams that have to approve things, or you have finance teams that hold the bank account. So there's friction in every single business journey because banking and payment is separated from what you're trying to achieve. We've started to see some great examples of this in consumer, right? There's the classic example of Uber where, you book a taxi using the app on your phone and you get into the taxi, you get out, and that's it. Somewhere along the way, a payment happened. That's because payment is embedded in the user journey. And I think there's an order of magnitude more opportunities to embed finance in other user flows to make for a much better customer experience. And in fact, that's what we're focused on at Cledara. Cledara helps companies buy, manage, and cancel their software. And that collaboration problem in a business, that optimizing what we're using, optimizing our stack problem, or communicating our stack is definitely not a payment problem, but either end of it is, right? There's something that I need to do my job that's not currently available in my company, so I need to buy it. Or, the person that was using that tool has changed job in the business or moved on. We no longer need it. How do I cancel? That's stopping a payment. So Cledara is solving a non-payment problem through payment. as an example of this, this new world of embedded finance where we're approaching. And this is massively exciting because if you think about payments being, I think, something about $200 billion a year of revenue for financial institutions, that's currently only being generated from payment type user journeys. And what embedded finance does is make payment capabilities available to every user journey. So I think the payments is going to be a massive growth market and a super interesting place to be.
So would you say that really payments and, I mean, in general, how people think about as banking is going to transform more into what telcos are today, where they've become somewhat of a pipe for delivering data, which then sell additional services on top of it? Or is that too much of a simplification?
I think it's definitely, directionally how I see it. I think that what's happened is for a long time, payment capabilities have been kind of stuck in the realm of payments people. It's almost a dark art. It hasn't been available to engineers, and it hasn't been available to engineers because, well, there's been no method to access payment capabilities. There are significant barriers to entry from a regulatory standpoint. And you have the gatekeepers in a lot of banks that could have made payment capabilities available to tech people. So compliance people that don't understand what you're trying to achieve and understand how to measure risk in this new world are preventing access. And so what's happened with banking as a service, it's basically dealt with all that rubbish. So people that understand both payments and technology have been able to fight the good fight for the rest of the world, and then package those capabilities into nice, relatively user-friendly APIs that can be understood by humans that aren't payments people, that can then think about how they can use those capabilities for non-payments problems. And if you think about it, it's really interesting. So coming back to us for a second, when we set about solving this software stack management problem, we started thinking about all the ways we could do it, right? We could scrape emails to detect what software you're using. We could, come up with 30,000 different integrations to the 30,000 software vendors or SaaS vendors you can see on Crunchbase to get that data flowing. But actually payments, because it is the beginning and end of every user journey, in a way, MasterCard and Visa are the old-fashioned Zapier. They connect everything. And so by plugging into that payments feed, in a way, was our growth hack. But actually, in fact, what we realized was it was a significant differentiator as well, because just scraping data or doing integrations wasn't enough to orchestrate that user journey. Our customers were still having to come out of our tool to go to their banking tool to complete it. So we're able to bring it all in one place, and that's thanks to what's happening with embedded finance.
So for those that have never heard the phrase banking as a service, how would you describe it?
So banking as a service is about, so think about it as software as a service, right? You pay a monthly subscription to a set of capabilities. Banking as a service is much of the same. You pay something on a frequent monthly basis or annual basis, however it works, and you get access to banking capabilities that you can then build products on top of. So you might be able to send and receive money, or create a bank account, or issue a card, all through an API call to a third party that abstracts away the complexity of how to do payments, how to do issuing, how to handle regulation. So you can build a differentiated financial product on top of that by adding value, combining those building blocks or those Lego blocks in a unique way to bring unique value to customers. What this does is it's super interesting, right? So if previously you always had to go to your bank account to do these things, banks are losing payment volumes and revenue as a result, because they're competing with very, very specific products that enable very specific user journeys, whereas a bank account is a general purpose product that does everything just well enough.
So it's really that banking as a service or payments as a service, that will be that critical driver in creating that embedded finance that you're talking about right now.
I think so, because banking as a service brings payments and banking capabilities to a much larger group of people than it's been available to previously. So you can have very creative software engineers that suddenly have a new tool in their toolbox about how they can solve hard problems, and this will create remove a lot of friction, create a lot of value, and I think create a lot of massive businesses.
So before we started recording, one of the things you said is that you have fairly controversial opinions about fintech and the future of fintech. So what would you say is like the biggest thing that you believe, but many people around you would say, no, Brad, that's wrong?
Okay, so I think there are two things, and let's go right back to the first wave of fintech, right? The neobanks or the challenger banks. So I think the thing that I believe that most people don't believe is that the last thing the world needs right now in almost any country or any developed financial market in the world is another challenger bank. So that ship sailed. I definitely wouldn't be starting one right now, because the incumbent challenger banks, such as they are, the early movers of reach, feature parity. It's a very commoditized product, and with embedded finance and banking as a service, those capabilities that you need to build those products are almost completely commoditized, right? So there's almost nothing long-term defensible there except brand, and brand is driven by marketing, and marketing is driven by cost of capital, and therefore the biggest companies already have the best access to capital in the challenger bank fintech space, and therefore competing with them is going to be extraordinarily difficult and a losing game. And what follows that is the impact on banks. And I think the second kind of maybe unpopular opinion or controversial view is that banks are facing a Cambrian explosion of competition. In the UK, if you were a bank, you had maybe 8 serious competitors 10 years ago. Now you have infinite, right? And not only are they infinite, but each of them are targeting just one product you have. And they're becoming expert in it. And not only becoming expert in it, they're becoming really good at messaging around it, positioning around it, which means that each of your competitors are going to be way better and more focused than you at getting that top search result in Google, which is how people discover financial products now. They go to Google first. They don't go to their bank branch. And so banks are not only losing their highest margin business, they're fighting asymmetric competition with people that are much better at competing in this new digital economy. And they're losing their customer acquisition channels as well at the same time. So I think what will follow is banks will be forced to become that telephone company, that utility that you described, because that's where the remaining barriers to entry stop that asymmetric competition, right? There's still regulation. The Bank of England still won't, give that many companies access to clearing of payments directly. And so you're still going to need an intermediary somewhere in your stack. That's one source of competitive advantage, and perhaps also banks' balance sheet and their cost of capital give them a defensibility. So perhaps capital as a service for banks can become a thing. But what that means is, if you're a bank with a massive branch infrastructure, it's probably pretty soon useless for you. And it's going to be something that you need to close because it's going to be a cost center and not a revenue center anymore. And so the result of that is the banks that react slowest to that will be the ones that probably won't make it. And I can challenge you this. Like, do you have an iPhone with you?
Yes, I do.
Do you know how to navigate to the Screen Time app?
The screen time, yes, by searching for it.
Yeah. So if you look at Screen Time, and you can see which applications you spend time with on your phone, and I bet you when you look, the amount of time you spend on your phone, probably less than 1% of it is going to be in your banking app, right?
Absolutely. It's a lot of Zoom right now.
A lot of Zoom right now, right? So
yeah.
The high street branch, the bank branch, was about putting banking where people are. People aren't on the high street anymore. They're buying on Amazon, and they're on the internet, and they're on their mobile phone, and they're not going to their banking app, right? So you're going to Zoom. I bet you've got WhatsApp up there as well, probably Slack. This is places.
It's like you're reading my screen right now.
and so this is what embedded finance is all about. It's about bringing the banking and payment capabilities and things you need to solve for as a consumer or business to the places where you actually are, rather than traditional banks forcing you to go to them. And that's why they're in really a world of trouble.
Yeah, so I mean, if we look at the telco world, like we've seen exactly what you've talked about with actual branches, right? So most branches were canceled. The ones that still exist are usually in larger malls or larger places where there's high traffic. And those branches or stores have actually converted more into like experiences. So they showcase like games consoles, TVs, laptops, tablets, and it's almost like another Apple store in some of them.
I think this is an interesting question. So I know pretty well a guy by the name of Tim Coby, who was the guy who actually reported to Steve Jobs at Apple, who came up with the concept and the design of the Apple Store, and then now he advises like car companies and banks and telcos about how they can conceptualize their physical spaces to be useful. And one common topic of conversation on the few occasions where we get to meet is about what banks do with their branches, right? And there's a great example of in Spain, right? So you've got a bank called Caixa, which is the biggest bank in Catalonia and maybe the third or fourth biggest bank in Spain. And they're actually the biggest retailer of Samsung products in the country. Why is that? Well, now, because people don't need to go to their bank branch anymore. Bank branches need to monetize in other ways. And so they've given KPIs to their bank branch staff and managers and tellers and so on. You have to sell this many TVs or mobile phones this week, obviously bundled with a loan to help you, pay for it in monthly installments. But think about that, right? That user journey. As a person who is going to buy, let's say, a television, right? There are different sizes, there are different resolutions, there are different connectors at the back, there are different, effective operating systems on them. Maybe they've got Netflix embedded. What does a person who's trained about, financial regulation and how to serve customers in a financial setting know about the optimal television to plug into your sound system? Right, they don't, and they don't even have the televisions in the branches for you to look at. And so, I don't think that banks have the right. They haven't earned the right to do that type of activity. And I think really it's kind of a desperate attempt to monetize their retail space. In fact, as I understand, Caixa even has a retail sales per square foot KPI that they track for their branch network, which makes absolutely no sense. And so I think that banks are figuring out what to do with their branch space, mostly because it's either on long leases or it's politically challenging for them to close their branch networks, as there are some older or vulnerable people that rely on it. But from a commercial perspective, it's going to be hard to justify, and I'm really yet to see anywhere in the world a bank that has actually found a good way to repurpose their space through a showroom or some other concept.
Yes, because it's very natural for a telco company to be selling phones, and then it's not a large stretch going to tablets, and while you're at tablets, well, you might as well sell a laptop, and a laptop is basically a small TV. So you can sort of expand that idea. If you're having TV, you're actually selling TV services as well. It sort of all fits together. But if you're doing with a bank, it's like it's harder to sort of justify or explain that, right? And that's probably why sort of the embedded finance. So it's rather than the bank going. It's just you going into the bank, is actually the bank being embedded in those other stores, right? That's probably a more.
And I think.
Yeah, go ahead.
Sorry for interrupting. I think the I think the banks also need to think about the risk they're incurring. In the UK, they were fined significantly, billions and billions for mis-selling insurance. Given what we know about the types of people that still go to bank branches today, having someone that doesn't know anything about consumer electronics sell something to somebody that also knows nothing about consumer electronics but was there to check on their bank account balance seems to be a massive opportunity for mis-selling, especially as being bundled with a loan, and often those loans are not very low interest rates either.
I mean, I can imagine, banks offering point of sale loans and those sorts of things already as part of other networks. You walk into an Apple store, you can get the product in installments as opposed to get it in one go, and you could be using a financial institution of some kind to finance that loan or to give you a credit card or something like that. But that has been happening for years, right? That's not something new. It was just a channel for acquiring new customers, right?
Exactly, and I think it has to be really be about adding value rather than just acquiring customers. And this is I think the great advantage of fintech. You live and you die on your understanding of your customers, the problems you solve, and your ability to execute on them. And so as we think about opportunities for fintech that come out of what's happening right now with coronavirus, it's super interesting to think about, asking the question, which parts of fintech are, disadvantaged right now and perhaps permanently disadvantaged, and which ones are advantaged and perhaps permanently advantaged because of, changing customer behaviors. And there I think about, companies like WageStream or Trezio that are helping people get access to their salaries a little bit earlier, or their government furlough checks a little bit earlier. And I think it's thinking about those types of things, and where innovation can be brought to bear to solve real problems, is really creating value, as against bundling finance with a television when you go to check your bank account balance.
Is there something sort of in the years that you've been working in this space that you wish you would have known that would really help out somebody who's now just sort of interested in it or starting to get into it, but they should really know right out of the gate?
I think, the thing about fintech is that it's the application of technology to a particular vertical, being, different parts of financial services. And so therefore, I think, if you're a prospective founder in the fintech space, really a lot of the same rules apply to you as being a founder of a social media company or a collaboration tool company or whatever. And that's really, you've got to, get out of your office. Maybe it's not possible right now, but as soon as you can, talk to people, talk to prospective customers, understand their problems. And, every moment that's, as I think Paul Graham says, every moment that's not spent talking to customers or building product is wasted time. So that would be the number one thing I would say. And then the other thing I would say is, particularly for European founders, is a challenge to always think bigger and be more aggressive. I think the number one thing that I learned looking at a company like Revolut is that, I really think they brought the West Coast Silicon Valley playbook to Europe, and as a result won, right? They didn't care about what their unit economics were right away. They were happy to give FX for free early on, because that meant that they could drive home their value proposition and acquire customers. And so, don't get caught up in unit economics early on. Think about how you can solve a problem for customers, how you can get more customers, and how you can keep talking to them to solve a problem they really, really care about. And then you'll be able to grow. And it's not about necessarily growing into growth. You need to understand, specifically how your business changes at different levels of scale. And that's certainly possible with payments and fintech. We're lucky that we get to monetize in in other ways through things like interchange or spread on interest or whatever. And so, thinking about how you can be more aggressive to win is really key. But that counts for both fintech and regular tech startups.
You mentioned Paul Graham's sort of idea you should be talking to customers or building the product, nothing else. So is there something in many of your previous roles where you talk to a customer and suddenly realized, oh no, we've been thinking about this absolutely incorrectly or wrong in a major way? Can you remember a point in time in the past when that happened?
I would love to have a controversial answer for you for that, but I think that what's important is not, say, hey, we've been in our dark room building product. Next month we're going to go talk to customers, and then you talk to customers. I think it's about establishing process and talking to customers throughout that journey as a founder. So before you start building product, as you're conceptualizing it, as you've got something to show and you're looking to get feedback, I think it's really important. And I think that one of the key KPIs that I've always thought about and implemented in both myself and colleagues, and certainly everyone at Cledara now, is the key KPI is our velocity of discussions with people outside the business. So the more conversations we're having, the more we're learning. That can also help sales. It can also help, solving tough engineering problems, and ultimately making a better product. So number one, it's about talking to people every step along the way, not just like, okay, now we've done this, let's talk to a customer. And that way you avoid those big shocks. I think one interesting area about talking to customers is when you've got a product where there's no existing analog, right? You're creating, in a way, a new vertical or a new market. That's particularly challenging. And I think that's one area where you can really make big step changes, and certainly we have. So at Cledara, right, one of the key tenets of Cledara is that, yes, it might be bought by the finance team in a company to manage their SaaS spend, but it's used across the whole business, right? So in a way, you're inviting the whole company to the bank account, which is something that just doesn't exist anywhere else. And early on, we were thinking, well, Cledara is the world's first smart collaborative bank account that everyone has access to. And we tried, we were positioning on that. And I can tell you very quickly, we figured out that wasn't the right way, because though it's completely true from a functionality standpoint, and it's exactly still, what we do today, it wasn't the right way of communicating that to customers. And so what we learned through talking to someone was that actually there was this, emerging term called SaaS spend management, probably someone that's a Gartner came up with. But at least by starting with that, it gave our prospects and customers a baseline way to understand us. And so that was an example where a conversation made a massive impact on the business, but more from a branding, marketing, positioning, and messaging standpoint rather than a product one.
That's interesting. So basically, we don't always know what we feel we understand what it is that we're selling, but it's really our customers, after understanding it, that tell us how it helps them, why they want to use it, and why that helps, why it helps them succeed more than before.
Exactly. And the challenge is, how you package that into 5 or 6 words max. So you've got a baseline for a conversation with someone, with a reasonable chance that you start out with a similar set of assumptions.
We've been talking about many different topics around fintech. Is there something that you're now curious about, or area of either fintech or maybe the emerging blockchain and crypto market? Is there something that you're curious about that you're planning on exploring, or that you have started to explore that you can tell us about?
That's a good question. I think that blockchain and maybe that's another sort of unpopular opinion, but I've never quite bought into any of them. I think, blockchain is a very expensive, slow database. And in fact, most problems solved by blockchain can be better solved by a database. especially as, a private blockchain, you're trusting someone to run anyway, so you don't really have the same decentralized thing. And if you think about the economic incentive for hacking Bitcoin or whatever, no one's managed that despite there being an enormous prize for doing so. Probably the one use case where it's interesting is where you require that level of security for something, and you can take the cost and the low speed of it. In terms of what we're looking at exploring, I think I'm super focused on Cledara and thinking about how we can enable businesses to be great. Right, we have in our toolbox literally everything available to financial services, right? Payments and potentially lending and digital onboarding and FX and everything else that exists because this is the business we know, and we constantly challenging ourselves and talking to our customers to think about how they can be combined in new ways to bring value. And I think really that's what I'm most excited about other companies doing as well, right? How can we combine those building blocks as a fintech community into new things to solve new problems and unlock new value for the world and people and make the world a better place.
Speaking of making the world a better place, if you have the opportunity to put up a massive billboard in your hometown, what would you put on that billboard?
So could I have two billboards? Well, let's imagine a fictitious hometown where there are only other founders. I would put like growth cures all. Like no matter what's going wrong, if you can keep growing, life can, you can cover up a lot of other problems, or you can survive a lot of other problems. But no, seriously, I think in my hometown, one thing that's really resonated with me over probably the last 7-8 years is the idea of give first. So I definitely just put give first on the billboard. And this comes actually from the Techstars community. Their ethos is to always give first. And that's the way they express it. And what that means is, you have empathy, you're a member of a community, and you want to contribute to that community without any expectation of getting anything back ever. And by being part of a community like that, it becomes super powerful, right? You can make the world a better place if you all give without the expectation of receiving, because you can help people in ways that they wouldn't be able to help themselves. And, maybe down the line, someone helps you too, and that's great, but it's not the objective. And I'd say that this is probably one of the key reasons why London emerged as the fintech hub of Europe and perhaps the world, because Techstars, they set up their first accelerator outside of the US in London, and it was a fintech accelerator. And you had guys like Greg Rogers, who is an American and a successful former founder with a couple of exits. He led the way on that, and guys today like Eamon Carey and Chris Adelsbach and Kartik Varma that are carrying the torch today for Techstars in the UK are still pushing that. And I love that community, and I would love the rest of the world to be like that as well.
Thank you, Brad, for giving us these insights into fintech and your journey so far. Is there something that I should have asked you, but I didn't? Is there something that you want the world to know or would like to tell the world that I haven't asked?
Oh, you could. I definitely think you should go to Cledara.com and if you're a founder of a tech company, see how we save you money on SaaS. But no, I think it's been a fabulous discussion, Marcel. Enjoying the chance to speak from lockdown, and I wish you all the best. Thank you very much for having me.
Thank you very much, Brad. And before you go, what's the best way to reach you in particular?
Right. So you can definitely do one of two things. You can either find me on Twitter at Brad Van L, BRADVANL, or you can email me at brad@cledara.com, CLEDARA.com.
It's like you have it memorized. Perfect. Thank you so much for joining today, Brad. It was wonderful to talk to you, and all the best to you in these lockdown days. Hopefully we'll get through it and we can finally meet in person again.
Cheers, Marcel. Stay healthy.